So going to the capital markets for us meant going through 3 stages. So 3 stages, the first one being making sure that the house is in order and our organizational and legal structure is intact. That means we have a holding, we have some sub-holdings, that is all intact. That was completed early 2020. The second step involved obtaining ratings on our credit worthiness. So we went to credit rating agencies, in our case Jan-Evert Post and Moody's, and they vetted our credit worthiness and gave us good ratings, good credit ratings. Then the third step was actually going to the market and issuing our bonds, our green bonds. And we did that towards the end of the third quarter, but it got settled in the first week of the fourth quarter. That was a 650 million euro bond. And that was the largest that was ever recorded in the real estate space in Central and Eastern Europe. Debut bond. The maturity of that bond was 5 years, and it was also very successful, measured by oversubscription. So we had nearly 4 times the book covered. Well, we went to look into the bond market as a funding source because of 2 reasons. First, because of the size of the company necessitates us to diversify. We have so big a debt quantum that just tapping to the bank markets is not enough, and the bond markets are far bigger and offer far more liquidity than the banks can offer us, and that's very relevant for us given our size. So that was one reason. The second reason for us looking at the bond market is because of the ongoing low cost of funding that we experience, that everyone sees in the market. I can state that for every of our 3 bond issuances that we have done so far, ECB also stepped in, so they also took part in our bond issuance. And clearly that drives the price to very attractive lows, and we've experienced that. Before we went to the market in September 2020, our group cost of funding stood at 2.2%. Over the 3 bond issuances which we concluded, we are now funding ourselves at 75 basis points, so 0.75%, which clearly is an indication of how low the bond markets are willing to fund us. And that resulted in a cost of debt at the moment of 1.6%. So we went from 2.2 to 1.6%, and on a debt quantum in excess of 3 billion. I'm sure that our shareholder was very happy with those savings that we realized. So the EMTN program is 4 billion for us, and it offers a very flexible way of tapping the bond markets. Especially the flexibility in terms of the tenors, the maturity, different maturities that we can tap. We've now issued a 3-year tenor, we've issued a 5-year tenor, and we've issued a 6-year tenor. And that flexibility and the speed of executing a transaction through the EMTN program gives us a lot of ability to fund ourselves at competitive prices. So once the market is attractive, we can immediately step in and take advantage of that. So the green bond operates under a green bond framework, and you can find it on our investor website, and it prescribes that the proceeds of the bond will only be used for so-called eligible green buildings or energy saving or sustainable investments. Now, as we have a portfolio which has sustainability ratings of very good or excellent, the whole of our portfolio can be used as an eligible use of proceeds. So for us, it's not very difficult to issue green bonds. In fact, we will only do green bonds because our whole portfolio is green. The other use that we can use the green bond proceeds for is to invest in energy saving or sustainable projects. And for us, investing in solar is very much top of mind. The performance of the bonds, I think it has been so successful because we're in the right sector. We're in the right part of Europe, and we're just a fantastic company, making very profitable growth, and that's about CTP as a company. But the other reason why I judge it has been a success is to see that There was an overwhelming demand for the paper, so it was multiple times oversubscribed. And also after the issue was done, the trading pointed at a lowering risk premium, which indicates that investors got more and more comfortable with us as a name, with us as a risk, and the risk premium has only decreased over time.